Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are looking at the top 3 stocks that can literally double your money that are trading at phenomenal discounts right now. Each of these stocks are owned by someone very credible and reputable in the investing space, such as Warren Buffett, Cathie Wood, as well as Bill Gates. We're going to be looking at a biotechnology company, a blockchain company, as well as a data analytics company. So to start off the video, we're going to highlight why Wall Street analysts think that these stocks are fantastic buying opportunities and why they think these particular 2 stocks can double, because the 2 stocks that we're going to start off talking about is Ginkgo Bioworks, ticker symbol DNA, and Riot Blockchain, ticker symbol RIOT. And then after we look at these 2 stocks, we're going to look at our last stock that could literally double your money in the span of just 12 months. So to start this video, let's look at Ginkgo Bioworks, ticker symbol DNA. Well, if you didn't know, Ginkgo Bioworks is a biotechnology company that went public through a SPAC acquisition last year, and the company is actually backed by Bill Gates. And this company is most known for their design and printing of DNA. They also have fantastic collaborations, specifically with Kronos Group, which is a cannabis company, because these 2 companies are working synergistically to make lab-grown marijuana at a fraction of the price. And this would be a game changer in that particular industry, especially because cannabis companies struggle to turn profitable. However, Ginkgo Bioworks can be used in a plethora of different industries and sectors, such as in pharmaceuticals as well as cosmetics. For instance, they are currently partnered with another biotechnology company named Optimvia to improve the efficiency in their manufacturing of biosynthetic heparin, which is used to prevent blood clots. Currently, the DNA stock trades for around $3.92 per share. The low-end 12-month analyst price target for the company is $6. The average price consensus for the stock among professionals is $11, and the high-end price prediction for the next 12 months is $15 per share. So clearly investors could easily double their money for this speculative biotechnology stock. Right now, around 5 analysts currently cover the stock. 5 of these analysts say the stock is a clear buying opportunity right now. 2 analysts say to hold the stock, while none of these analysts say to either sell or that the stock is going to underperform. Now, I personally would rather buy or own this stock at around $2 per share because I think there's more downside opportunity in the stock, so investors can get the stock for even cheaper than what it's currently worth. With that being said, this stock has also pulled back recently by almost 10% based on various macroeconomic factors. If we look at the chart over here, you can see originally the SPAC was around $10, and then it had some great increases at first, and then after the increase and the hype from the SPAC merger went away, the stock price absolutely plummeted, and there hasn't been a bottom in sight yet, which is why I think the stock could continue to fall around $2, and then that would be a good investment opportunity for the overall company. Because this is technically a speculative biotechnology play, but it could double your money in a very short amount of time. The reason why Ginkgo Bioworks is a speculative play is because this is a very early stage growth company. And if we look at its earnings period, which ended on September 30th of 2021, they had sales of around $77.6 million, which were really impressive because that actually tells us that they have increased their sales of around 6 times, because prior to this, in a year earlier, they brought in around $13.3 million in that similar time period, which is fantastic news. So clearly they are scaling their revenues and their sales. However, I do want to mention that their net loss also increased up to $102.4 million, which is actually a 3 times increase from their net loss from the year prior, which was only $26.1 million. But honestly, I will take them scaling their revenues and sales by 6 times for a net loss of only 3 times, because that does mean they are technically more efficient and their sales are growing faster than their net losses. I also want to highlight that the company does have fantastic news, particularly for their balance sheet and their financials, because they have around $1.7 billion worth of cash and or short-term equivalents or liquidity on their balance sheet right now as of that recent quarter. So the company has a lot of money on their balance sheet that they can use to fend off and fight off their recent cash burn, because over the last 9 months, they have actually burned around $88.3 million from their day-to-day operations. So luckily, they have enough money on their balance sheet to actually fend off this current cash burn until the company starts to really scale and potentially become profitable. The current market cap is around $7 billion, which means that Ginkgo Bioworks is not technically a small company right now. However, the good news is that analysts do see fantastic potential upside for the overall stock price. For instance, the stock is trading at around $3 to $4 right now, but analysts have price targets for the stock of around $12 or more, and that is a fantastic risk to reward ratio, especially especially if you can snag the stock below $5 per share, according to analysts. So I just wanted to put this stock on your radar, that it has a lot of cash on hand, that it is a speculative newer growth company that is in its early stages, but it's backed by a very big name such as Bill Gates, and it has a lot of future growth potential. But ideally you would want to get into this company at around $2 per share. Now I want to talk about a blockchain company, which is going to be Riot Blockchain. Another good blockchain company would be Mara, but we will do Mara in a separate video if this video does well enough. And Riot Blockchain is basically among one of the leaders of mining Bitcoin. So their whole business model is the production of Bitcoin using mining devices such as ASIC miners. And throughout 2021, the company has mined around 3,812 Bitcoin, which is absolutely fantastic. I also want to highlight back in June of 2021, the company actually started to expand a project that would double the capacity of their Texas-based facility, which is going to make them even more profitable, thus solidifying them as one of the largest mining and hosting Bitcoin facilities in all of North America. Now, currently, Riot, ticker symbol RIOT, currently trades for around $16 per share. The low-end analyst price target for the company is $21. The average price consensus for the company is $43, and the high-end bullish price prediction for the next 12 months is $53 per share. Now, in my personal opinion, ideally, we would want to get this company at around $10 or cheaper. However, analysts really like this company because right now 10 analysts cover this stock, and out of these 10 analysts, all of them say that this is a good buying opportunity at current stock prices. However, I want to mention that blockchain stocks can be extremely volatile because not only are they tied to the stock of Bitcoin and other cryptocurrencies, many investors just don't understand the underlying technology and what these companies actually really do. The shares of Riot have increased more than 300% at one point, but since then it has fallen back to almost a 52-week low of $12.90. So if you don't have a good stomach for volatility, this may not be the best company to buy. If we look at the RIOT stock price chart, we can see that the stock is extremely volatile, going through various cycles, very similar to actually the Bitcoin graph. So you can see in current market cycles, the stock price would absolutely skyrocket just to fall back down, and then it would consolidate just to skyrocket, and now the price is falling back down. However, it's funny because the Bitcoin price is still relatively high, and the stock price for Riot should definitely be higher than what it's currently trading at around $16 per share. But I will leave that up to you of what you think of this company and if it's a good buying opportunity. But what about the financials behind this company? Well, for the period that ended on September 30th of 2021, the company brought in around $64.8 million worth of revenue, which actually shows an increase of around 2,500% from what the company brought in for the same quarter but in the year prior, which was around $2.5 million. So the main risk that investors face here is not only market cycles and major volatility for the overall stock price, but that it's tied to the value of Bitcoin, which also can be extremely volatile because it's a cryptocurrency. Bitcoin has been as low as $29,000 recently, and it's also soared up to almost $70,000. So just like how volatile Bitcoin is, Riot will also be extremely volatile. However, despite this, analysts are still very bullish on the overall stock price and the overall revenue generation that Riot could bring in, especially if Bitcoin continues to appreciate over the long term. Analysts believe that Riot shares could actually reach more than $40 within the next 2 years, and in the next year it could more than double its current stock price. So overall, very bullish news for Riot. Now lastly, I want to go to Snowflake, ticker symbol SNOW, and similarly to Ginkgo Bioworks, which has major backing from Cathie Wood as well as Bill Gates, I want to highlight Snowflake because this has the backing of Warren Buffett. So why is Snowflake on this list? Well, if you didn't know, Snowflake recently had an earnings report and it disappointed investors, which caused the SNOW stock price to fall around 30%. This stemmed from their adjusted earnings, which came in at a loss of around 43 cents per share, but despite this, their revenues actually came in higher than anticipated. Analysts currently forecasted that the company would bring in around $372.6 million, but the company actually brought in around $383.8 million. million. Snowflake has also been rapidly growing their overall revenues. For instance, Snowflake's revenues grew by around 101% year over year in the fiscal fourth quarter, which ended on January 31st. The company also has plenty of customers because they currently serve around 6,000 clients as of the fiscal fourth quarter. Right now, the current stock price trades for around $217 per share, which is decently cheap because the low-end analyst price target is $250 per share, the average analyst price prediction is $377 per share, and the high-end price target for the company over the next 12 months is $575, meaning that the stock could more than double. Now, ideally, personally, I wouldn't buy this stock over $200 per share because I think investors could see more downside for this stock in the short term. However, overall, the ability of Snowflake to be able to scale their overall revenues is absolutely phenomenal, but I do think that they are trading at a very high market capitalization currently. Right now, around 29 analysts currently cover the stock, with 20 of these analysts saying to buy the stock and 9 of them actually saying to hold the stock. So while investors have mixed opinions about Snowflake, analysts are pretty on board with the bullishness behind this overall company. Warren Buffett also likes this company, and he sees great future trajectory and growth and future stock price appreciation. So if you like Warren Buffett, you may want to copy him on this particular trade, but again, we need to do this wisely and don't overexpose yourself as if you're guaranteed to double your money. Snowflake makes the majority of their revenues from their product revenues, which reflects very positively on their overall stock price. They also have other revenue sources, which would include consulting as well as training. Snowflake said that it expects their revenues to grow at a rate of around 79 to 81% over the next few quarters. While analysts echo this and say that the company is predicted to grow their revenues, specifically their product revenues, at around 78%, which is fantastic news for the overall company. This is a fantastic growth rate because this company is rapidly developing itself. If we look even further to 2023, their management actually calls for their product revenue growth to be between around 65% to 67%. And honestly, anything over a CAGR of 30% consistently over the next few years is absolutely phenomenal. So we clearly want to keep our eye on this particular company. I also want to add that Snowflake is acquiring a data startup company named Streamlit, in which Snowflake agreed to pay around $800 million for Streamlit, and this again is going to bolster their overall revenues in the future and make Snowflake much more competitive in the overall market. Snowflake is really into data, and their services mainly stem from either storing or running queries on a variety of different kinds of data. And because you all know me, I always say that data is the new oil, which is the reason why I like other companies such as Palantir Technologies, because data is the future. It optimizes the company, helps them make better decisions, increases their revenues, and lowers expenses. So over the long term, I would say Snowflake is probably one of the safest stocks to buy out of these three. The one that has the most upside is most likely Ginkgo Bioworks. However, depending on what Bitcoin does, and if Bitcoin goes to the moon, then a Riot Blockchain could be one of the most lucrative investments. But I would love to hear your thoughts down below about these three stocks between Snowflake, Riot, and DNA, which is Ginkgo Bioworks. Smash that like button right now for more videos like this one. Subscribe if you are new, and I will see you in the next YT video.